The markets are on a roller coaster ride. We saw a big pullback in gold, a big pullback in bond prices, a jump in yields as the DXY, the US dollar currency index, continues to fall. The money was moving between the safe havens and the equities market. We confirm this because we can see junk bonds and high-yield corporate bonds staging a bit of a recovery. If we see a sustained recovery, it's going to be quite fascinating what happens next. We also saw that the VIX decreased. It is over resistance. This could be a short-term thing. We're going to look into it in this episode. In a little under a day, the FOMC will release its federal funds rate. The Fed has released a massive amount of stimulus into the economic system. And why is that? There's been a run on the banks. As confidence is lost in the banking system, flights to safety occur into gold, into the bond market, and into crypto. It's widely believed by retail investors and traders that the Fed will simply just not move rates. We are a data-driven global family, so when we look at something, we must have a chart to back up our position. There's currently an 86.4% probability of a 25 basis point increase in the federal funds rate. If you're new to the channel, a very warm welcome and welcome back, KS family. We've seen a 2-year yield fall off, the largest 5-day decline in yield since the October 1987 crash. Looking at the fear gauge of the bond market, the inverse move, we can see the move has been pointing to negative price momentum. The Bank of America did an estimate on where the S&P 500 could go. It predicted that it could go up to 4,600 or down to 3,000. It remains to be seen which direction it will go. We need to look at this each day. We need to track the signals of the market to determine what that outcome, what those stack probabilities are. We're seeing a lot of fear in the banking system, not just in the US, but globally. A lot of people see news headlines like this: US studies ways to guarantee all bank deposit if the crisis expands. As the global banking system is a fractional reserve system, the only way to do this is to bring in a central bank digital currency. That way, the governments can guarantee everything because they just make it up. Looking at the top 15 US banks, how have they been reacting to this news? Citigroup doesn't look good. And when we look at the other banks, they're basically in a downtrend. But we can see one bank, Citizens Financial, that is doing quite well. It's important to understand that regional and local banks account for nearly 40% of all lending. The banks do matter. How does the press report this? Bank rally helps lift stocks as the Dow climbs 316 points. What bank rally? I'm having trouble seeing it. Do you see it? Yeah, well, there's a little bit of a kick up, but that's like a dead cat bounce. What about the top 10 European banks? We can see Credit Suisse as having a bit of a headache of a time at the moment. But when we look at the top 10 European banks, they are mirroring their US counterparts. One thing to bear in mind, when the lead up to the global financial crisis occurred, what we actually saw was a lot of government intervention. That rallied the market somewhat. Just be really, really aware of the major overall trend. I've been doing a lot of deep dives because I want to prepare you ahead of time for what could be unfolding. If we see the S&P start to break its resistance, and we've thought we're either here or here, it's most likely that we're here. Notice how high-yield corporate bonds and junk bonds give some indication of market direction. Please keep your eyes on those two things. We look at it each and every day. One thing that you do want to notice, the S&P 500 rebounded here, broke out, and then broke down. Wow, a lot of breaks in this. What is the S&P 500 doing now? Remember that we've been talking about for quite a long time. The smart money buy levels between 38.78 and 39.39 are incredibly strong. We can only see these through the CTKS method. The CTKS method looks at objective dynamic market structure where the algorithms are stepping in to buy or to sell. One thing that's very, very important to understand, if we start breaking down from these levels, it could get really ugly really quickly. Do we assume doom and gloom that everything is going to crash? No, we don't. We're just mindful. We're prepared and not scared. Remember that you control the trade or investment, but it's the market that controls the return. And your market returns are always based on your active learning, your knowledge, and your courage. You must have a system. One of the ways to deal with the market's volatility is to do your daily three-dimensional risk management code. What you actually do is to assess if the market moves against you first. Don't think about the market going for you. Think about the market actually going against you. This is very counterintuitive to a lot of people, but you'll make far, far better returns by doing it. Therefore, when we look at the SP 500, we know there's a lot of support. We're taking out this first level of resistance. That's fantastic. That's good. That's what we want. But unless we get into the 4100 mark, we're still under resistance. It basically means nothing until we get around the 4100 mark. Please bear this in mind. We also know the price is always moving in a wave. It's always going up and down. If the S&P 500 comes back to tap this area of smart money buy support around 38.78 to 39.39, it's a fantastic thing. We want to see constructive positive price momentum inside the market, but we're also prepared for that support to fail. The S&P 500 is currently 4,002. With confidence in the financial system wavering, gold, Bitcoin, and bonds have been doing very, very well. And when Bitcoin does well, the alts do very well as well. Bitcoin believers revel in told you so moment. Big rally as banks crumble. As a professional trading community, you can't get better than crypto. The volatility inside crypto is just magnificent. We understand the mechanics and the interplays in between markets. We also know that Bitcoin cannot escape the stock market's gravity. And what is this white line? You've got it. That's the S&P 500. We have many rules to seek to keep us safe. And the volatility is something that we embrace. We can see that this smart money resistance area between 27,843 and 28,380 has been having a hell of a time for Bitcoin to get through there. Bitcoin is currently 28,065. We can also see some structural weakness starting to emerge in Bitcoin. Now, what does this actually mean? Does this mean Bitcoin could fall? We know the price is always moving in a wave. It's just going up and down and consolidating. It does that all the time. You can see that Bitcoin, just like literally all financial instruments, is just moving up and down and up and down and up and down. That's what it does. The real question that you need to ask yourself, if it goes down, where can it go down to? Well, it will come down to a smart money buy level where the algorithms kick in. And what do we see with these smart money buy levels and smart money sell levels? We see the price just ping-pongs between them all the time. Now the case, if Bitcoin goes up, where is the next level of resistance? It's between 29,930 and 30,221. And if Bitcoin comes down, where's the next level of structural support? Where is the next level the algos will kick in? It's 26,621 to 26,697. The key in all things is just trust the lines, trust those SCs, trust those SLs derived through the CTKS method. But a lot of times people just look at price action like this and they use recent indicative price. They say, oh, okay, well, we've got a bit of support through here, so it should hit here, and we have some resistance. After it gets through resistance, it's just going to go to the moon. That's recent indicative price. That's just like saying, I've looked at something, it's been trading for effectively, a couple of days now, and I'm basing all my decision-making process on that. You can see that's absolutely insane, but that's what most people do inside financial markets. That's why I call it RIP, because recent indicative price will RIP your money, and I'm going to show you that with gold. Another thing that typically happens is story-based analysis, or SBA, and you'll learn all about this in the CTKS method, which is literally a revolution in how technical analysis is done. When we look at Bitcoin's price action, we look at all of Bitcoin's price action since its inception. That's exactly what gives us these Stanfield zones, and Stanfield zones are composed of Stanfield levels, or SLs. Literally, the CTKS method gives you the understanding of where price can come down to, where it can get caught in terms of very, very steep sell-off. And that's one thing that moving averages can never ever do, because they're just tied to price. They can't predict price. They can only show you what price has done in the past. From the headlines yesterday, Wall Street's fear gauge crumbles with risk-on bid. What are they talking about? They're talking about the VIX, and the VIX did definitely come down, but the VIX is over a level of resistance. And when we look at credit spreads, which is literally the risk inside the financial system, they're not picking up on the message that the VIX is sending. They're saying, VIX, are you sure about this? I'm not happy with the banks. There's an inverse relationship between the VIX and price action. And when you see credit spreads just popping up like this and the VIX exploding, you can see that negative times could be afoot. But luckily, we've got so much strong structural support under the SP 500 that it's literally propping up markets. Talk about good timing for the banks. I'm in crypto now. Why should I head back to the market? Because it's all intercorrelated and interconnected. Remember when I drew the S&P 500's price action across Bitcoin's chart? It mirrored it. Not exactly. There are lags. And the reason that there are lags is because Bitcoin trades 24 hours a day. But the key thing to remember, there's so much strong structural support between the 3878 and 3939 mark that it's literally propping up global financial markets. And it's all thanks to objective dynamic market structure. We keep this in mind because we know the VIX is entering a period of historical volatility. Around March, the VIX does tend to spike. We've not really seen this in this particular year. One thing to keep our eye on is what is happening with oil. Oil at the current time has lost its support. This is very important to understand. When oil starts to come down, it's generally not a good thing for financial markets. What is happening with the DXY? The ascent of gold, Bitcoin has been primarily driven because of the DXY's descent down. But I mentioned there's a major support between 102.991 and 103.178, and the DXY is currently 103.215. It's dipped into this major structural support. What does that mean? It means that the DXY could soon rally. If the DXY rallies, we would see the VIX spiking. We would see junk bonds and high-yield corporate bonds start to come down. Please be aware of this. We need to keep this on our radar. But what do we actually do to fight fear and stay inside the market? We just look at price action. We see if the weakness or strength is occurring, and we just react accordingly. A lot of analysts do story-based analysis or SBA. We don't do that. We instead look for continuously reliable signals. When you look at the DXY coming down and Bitcoin going up, it may not look like much of an association between the two, but what if I inversed Bitcoin? Or what if I inverse the DXY? Let's inverse Bitcoin. That would be fun. Please let me know in the comments, do you see any relationship between inverse Bitcoin and the DXY? What about the SP 500 when it's compared to the DXY, because we're looking for continuously reliable signals? Hey, let's have some fun. Let's inverse the SP 500. Do you see any directional correlation between the S&P 500 and the DXY? Please, again, let me know in the comments. This is all part of your active learning. When you actually put a comment to it, it goes into your brain and says, hey brain, think about this. This is pretty good stuff. And it is, because if the DXY starts to bounce off these particular levels, what could happen to Bitcoin and the S&P 500? What you're actually doing is you're seeking to stack probabilities with continuously reliable signals, which is all part of the CTKS method. When you look at something, you're actually seeking interdependence and interplay, directional correlation. It can make the difference between profits and losses. There's something else to consider. When we looked at the euro versus the USD, there was very, very strong money structural support between 105.238 and 105.338, and that's exactly where the euro versus the USD actually bottomed out. Please be aware that there's immense structural resistance around the 107.199 mark to the 107.695. If we see the euro continue to break out, we would expect the DXY to continue to break down. But if we see the DXY start to rally, we would anticipate that the euro would come down. Please be aware, again, this is another stacked interplay, another stacked probability. With the flight to safety into gold, gold has been going on an absolute monster run. It's been doing very, very well. But if you look at this through recent indicative price or story-based analysis, you may not have seen the warning signs, and they were definitely inside the market. And if you had the CTKS method, you would have seen them because they're as clear as day. When we put objective dynamic market structure as measured through the SLs and SCs, what we can actually see, gold was coming up to a very strong confluence of resistance levels. And what happened, and this is the reason why these SCs and SLs are so powerful, they help you to understand where price could turn around and bump around against, and what could happen from there. It's very, very valuable to know the market structure of any particular thing that you trade. And we can see when we lost the 1980 level, we bypassed the 1954 level. Gold is under a tremendous amount of stress at the present time. But what caused that stress? All of this resistance above gold's price. If you had objective dynamic market structure on your charts, you would be able to tell this was there. And why have I got inverse S&P 500? Let's have a look. It's because it throws a consistently reliable signal, and that's what we're all about. When it comes to stacking probabilities, the more consistently reliable signals and the more things, the more charts that you can stack against each other, the better off you will be. The CTKS method is incredibly powerful, and it's available through the Masterclass. The key is you need a strategy, you need your foundations, your fundamentals in place. We understand that crypto is the most volatile market on the planet, but as a trader, volatility is your best friend. So you need to look widely. You need to check the stock markets, checking world events and collecting probabilities. That's exactly what we've just done. And then we go into the crypto market, finding the market's focus and understanding that opportunities reset daily. Enhancing your pattern recognition is really, really important. One of the best strategies that you'll ever develop is the mastery of emotional control, and that's done through positive excellence, which can be absolutely and utterly life-changing. Please let me know in the comments if positive excellence has assisted you. And then, and only then, do we get into the methods of buying and selling. A lot of people start reverse. They inverse this process. They just basically just guess and think, okay, I'm going to buy here, I'm going to sell here because everybody else is doing it. Think about gold as a case in point. A lot of people would have got trapped on the wrong side of the percentage. But we know that resistance was coming. And the beautiful thing in life, you must manage your own finances. You must be your own financial advisor. And coming from a finance degree, that's very interesting of me to say that, but I truly believe it. If you've got mastery over your own financial decision-making process, you're ahead of 95% of other people. One thing to bear in mind, the world is polarizing. President Xi met with President Putin, who hailed China's proposals for the Ukraine surrender. Something to keep in mind. Vanguard is set to shutter its business in China and exit Ant Ventures. Vanguard is turning its back on a $3.9 trillion fund market. This move marks a complete exit from China for the $7.1 trillion giant. It's just not seeing significant potential in the world's second largest economy. This could see a structural shift into India and Africa, just something to bear in mind. I'm coming back to this quite a bit today because it's so vitally important. The S&P 500 over this first level of resistance, this particular resistance line here, is very, very positive. But unfortunately, we've seen explosions in price pre-FOMC meetings for a lot of occasions. We're seeing crypto has had a little bit of a trouble getting through this 27,843 to 28,380 smart money sell level. The key to remember, if the S&P 500 continues to rally, we would expect Bitcoin to continue to rally as well. If you're defining yourself as an investor or defining yourself as a trader, potentially that definition is a little bit too narrow because all investors become traders anytime they buy or sell. That means all traders are investors as well. This is Rule 138. The best investors know how to trade and the best traders know how to invest. Combining both skills is something that should be on your radar. XRP and ADA have had absolutely standout performances. And in the top 100, they are both the first and second greatest gainers in the past 24 hours, followed by Stellar, Magic, Doge, ZEC, Algo, and Ethereum Classic. Looking at the greatest losers, top 100, Mask, Synthetics, Nexo, EGLD, Stacks, BTT, Pax Gold, and FEI. Yesterday, we looked at the concept. What are the alts doing? They were absolutely showing weakness in comparison to Bitcoin. And we saw the two weakest there, ADA and XRP. They were the weakest. Today they are the strongest. Welcome to crypto. I gave you that little exercise because when you invest time in answering questions, you look at the market differently. It gives you an edge, and that's what I'm all about giving you. We know that currently Bitcoin is sitting in a smart money sell area. The sellers are coming down and pressuring Bitcoin. Will they pressure it to the point that it breaks down? Well, potentially, if the S&P 500 continues to rally, that's really, really good for Bitcoin and the entire crypto market. What we can see is Ethereum did a bit of a bounce up, but it's a little bit weaker than Bitcoin, as is BNB. XRP, absolutely stellar performance. We're going to look into the internal market structure of XRP in a minute. And ADA did incredibly well. Go Charles. And when we look at Matic, not so well. In fact, it was replaced by Doge in the top 8. But what I want to do is to just create this bridge from yesterday's video to today's video. What happened was Doge was stronger, so it's taken out Matic. So let's replace Matic. There we go. We can see that Doge really, really recovered strongly. There's been some interesting changes in the next 8 top cryptos. Of course, Doge took out Matic, so Matic has swapped positions, so it's in there right now. But let's see what else happened. We can see Matic took out Doge in the negative direction, and Solana stayed where it was. BUSD stayed where it was, and DOT came out of nowhere and displaced SHIB and Tron. And it's very interesting to see that we lost the DAI stablecoin. Litecoin, and then AVAX. Matic can be very, very interesting to watch, so keep your eye on Matic. Solana showing a lot of strength, but we just note what's happening to Bitcoin's gravitational pull. We can see Matic actually starting to invert. Even though DOT did so well, it's still under resistance, and when we look at SHIB, it's just mildly just trying to get above resistance. When we look at Tron with the EC method, you can see easily Tron is over resistance. Remember, price is always moving in a wave. You want to take note of the volatility inside whatever you're trading and make it work for you. Litecoin is still under resistance, and when we look at AVAX, it's still under resistance from this particular part, but this particular part, it's over resistance, so it could be making a play up to around this level. Let's have a quick look at ADA, and then we'll change across to XRP, and we'll just analyze it through the CTKS method. When you look at recent indicative price, you can see that ADA has bypassed its resistance. And when you look at objective dynamic market structure, you see what? Of course, we can't see it unless we turn it on. So let's turn it on. We can see that ADA has hit its first smart money sell resistance level from 377 to 384. Now, when I say 377, I don't mean $377, 0.377. What happened when ADA reached that level? The sellers came in, and that's exactly what the sellers do. ADA has major resistance between 439 and 465. When we look at XRP, we can see XRP did very, very well. But remember in yesterday's video, XRP was very weak. Why was it weak? That is the question we need to answer. We can answer it through the CTKS method. What we actually saw yesterday was XRP was just below this smart money sell resistance level from 3929 to 4007. XRP is currently 4614. This is why it was weak. It was getting pushed down by the sellers. But what happened when the buyers came in and said, okay, sellers, you've had your turn. It's our turn now. It jumped to the next smart money level, and it's had enormous push through because this is very, very sizable resistance that we're seeing in XRP. And if we just looked at it like this, people would say, oh, it's going to continue on forever. But the sellers are going to have their time, because when it's a lot of overhead resistance, it's like being deep, deep underwater. You have to really struggle to get up to the surface. The smart money support area between 43.44 and 44.38 is incredibly strong, and we can see some levels above those. That particular range is also quite strong. If XRP comes back and tests this smart money buy level between 43.44 and 44.38, it would be very, very constructive, so long as we don't lose that level. I just wanted to zoom out a little bit and show you something, because I think it's quite intriguing. When we look at Bitcoin at the moment, it has a smart money sell level above it. It's not exhibiting this degree of weakness that XRP exhibited here, but it gives you a bit of a concept. If a particular asset class, and it doesn't matter what it is, it could be gold, it could be XRP, Bitcoin, silver, the euro, it could be anything, it doesn't really matter. If it can't get through that particular smart money sell level, when it comes down and gets through resistance, it will try to attack it again. And that's what we saw with XRP. If it gets through it and there's a lot of fresh air, which means no resistance, it's going to go up quickly. The ascent of XRP would be staggering to some people, but when we look through objective dynamic market structure, it's not so surprising. It's also not so surprising that the sellers are coming in and exerting this pressure. There's a wall of sell activity above XRP's price, but there is this very strong smart money support area between 43.44 and 44.38. Just keep your eye on that zone. In the stock market, we generally talk about gap fills, but this is a gap fill when it comes to the CTKS method. This gap will be filled, and it's a very, very powerful thing to understand. The CTKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method. And you can see the CTKS method can be applied to anything, because it actually updates hundreds and hundreds of years of candlestick pattern analysis and also methodologies to make them apply to crypto. If you take normal conventional stock market and forex, TA or technical analysis, and apply it into crypto, it just simply won't work. That's why I invented the CTKS method. After more than 3 decades in financial markets, it's very, very powerful, and we look at it each and every day. This is an institutional grade methodology, and I share all of my experience through the masterclass. Someone you know very kindly offered a CTKS partial masterclass scholarship. You can apply for this in the links in the description of this video. If you want to be your own financial advisor, if you want to be able to understand the footprints of smart money, the masterclass is a very, very good way to go. As a global family, we focus on positive excellence because we want the money, but we want to be happy as well. The path to wealth is often a rocky one. It takes an enormous amount of persistence and commitment. Literally anything worthwhile in life, you have to put a lot of effort and energy into it, and you have to keep at it day after day after day, not just when you feel like it. If you look at anything that you've accomplished that's great in your life, you can see that persistence and commitment have a lot to do with your success. I thought it would be good to talk about persistence and commitment in the comments today. And please keep on using the form that I have here to let me know what you would like to see marked up with the CTKS method. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye.